going? How's it going? It is I, your boy TJ, coming out straight from M5 Property Addicts. This is where we talk about anything and everything around property. Good morning to you. I'm not so sure where you are. I am hoping that in the comments you can tell me where you are. But this is the show. We come out to you Monday to Friday, and we talk about real estate. We do this every day in South Africa, in 4 cities: Johannesburg, Durban, Cape Town, Pretoria, and Johannesburg, Cape Town, Pretoria, Durban. Yeah. And over and above that, we're looking at other towns and soon to be hitting up. I think Bloemfontein is almost ready for us, and we can jump in there, which will become our 5th city. Right. I do property every day, and this is what I decided to do, investing in property for the last 5 years, and we've taken it seriously. I left my job because I was exchanging my time. And my skill for money at the bank, and I've realized that, rich people actually don't work for money. Rich people don't work for money. They work for assets, and those assets will then give them the money that they are looking for. And this is exactly what we are doing at Empire Property Addicts. I don't do it alone. I do it with some of my business partners, and we get to find all the opportunities, and they come in to invest alongside us, and we go and make the money and report back and create passive income for everyone. Today, I wanted us to talk about a couple of things. I've just realized that the more I engage with people who are wanting to invest in property, and I'm stressing here, wanting to invest in property, the more I realize that as a people, we don't know what we don't know. And by no means am I not slaying the people to say, hey, you don't know. But I was in the same position as well. And when I start talking about, hey, let's invest together, people, they have a certain expectation. And that expectation is that they're just making money in and out. But I wanted to showcase to you guys that there is more money than what is shown on the table in property. And I want to show you there's hidden money. There is hidden money. And what is that hidden money? And I'm going to allow me to do that within the next couple of minutes, 10 to 15 minutes. We're going to unpack it as we go along. But first of all, what I wanted to stress out to you guys is, for some of you, you registered to come into the investor session last week, Tuesday, and the other week. And we had some technical problems there, and I would like to apologize for some of you that were not able to log in. However, we have discovered the problem, and my team was working throughout the week to find what is the problem actually. And we discovered it, we traced it down, and we have solutioned it. So for some of you, if you were not able to log in on the day of the info session, fortunately, we did record the session. And please check out your email. You should have received an email of the replay. When you're finished listening to it, and if this is for you, and I want to stress out the fact, if this is for you, then you can put in your application form, and from there, we can take it to assess whether you can invest alongside us, right? Yes, we are going to make the final call on our side, because it's about investing in the long term, and it's about investing with people that we understand. So we want to make sure that before we jump into bed together, at least there's a mutual understanding of what you're investing into. Right, now that I've got that out of the way, whilst you're watching this as well, you can also tell me where you're watching me from. That's great. I see a couple of people from Cape Town. Great, awesome. And yeah, let's go ahead. So I just wanted to share with you guys, and for some of you who are watching me, you can do, if you're watching me from Facebook, you can do what is called a watch party. Watch parties that you can share on your page so that we can get more people to understand how to invest. Now, the first thing that I want to speak to us guys is that when you're investing in property, right, there is hidden profits. People don't see that. They just see it on the face value. And today I thought, let me kind of like unpack the hidden profits that we make in property. And the first one that I want to speak to is that whenever we are going to buy a property, right, traditionally we go and see an estate agent, and we see the property and we get excited. Oh, yes, it's the right color. It's got the nice views. Yes, the doors are amazing. The handles, yes, great. And it's a 1 million property. That's what they are asking for. And then we go in to put in an offer, 980. They accept it. Then you're like, yes, we got a discount. Yes, yes, we are happy. Well, that's not really a discount. It's okay. I mean, you got yourself 20,000, but it's not really exciting. What is really exciting is on the same property for 1 million, the value is 1 million, but you get that property at 500, 600,000. You get it for 400,000. I speak of this because I know I can do it. I've been doing it alongside with my team. We've been getting properties at such a discount. So the first one is that when you get this discount, what does it mean? So when you're doing property as a business, there are two sets of documents that are very important and people miss this. And these documents is called an income statement. Everyone does have an income statement. A company also have an income statement. Income statement is when money is coming into the business. I'll speak from a business because we invest in a business. So money is coming in the business, and you got your expenses, right? And your expenses then come in and go out. So you got an income statement that shows the profitability of the business on a month-on-month, so which is great. However, when you're buying a property at a discount, it doesn't really impact your income statement at first go. But what you do have, a second set of document, is what is called a balance sheet. Balance sheet speaks to things like assets and the liabilities. The reason why I'm talking about this is because some of us, we didn't do accounting. We didn't even do maths at school, So this is maybe a little bit confusing, a little bit. But I'm here so that we can, dissect it a little bit. So there we are. We've got what is called the balance sheet. In your balance sheet, you've got assets and liabilities. Assets is things that gives you money, right? And liabilities is things that take away from you. The more assets you have, the richer you are. Simply put, the more assets you have, the richer you are. Yes, you are rich in assets, but when you're now going to the bank, you can actually borrow more money because you've got more assets. The bank trusts you. The bank will open up their wallet to you. All right. So I'm going to go back to the first point, which is that you're buying a property low, that property that we bought for 1 million, and a lot of us, we buy it for 980. We get excited that we actually bought something on a discount. No, I'm talking about 500 discount. I'm talking about 600 discount. Let's just say we buy this property at 700,000. When you buy it at 700,000, this is what happens. On your balance sheet, you're going to record this asset. Because you're going to record it, the real value of this property does not change from 1 million to 700. No, that's what you paid for. The real value of it will still keep at 1 million. So you record it in your balance sheet as 1 million, and we will get what is called equity. Now, equity is the difference now between the real value and what you've paid for, in this difference here. Now, equity is just as good as asset. That's the asset that you've got. So in your property that you just bought now, you already have 300,000. You just bought a property, and in your balance sheet, boom, your balance sheet goes up, and you now have 300,000. That is the first way in which you can make money in property. It's a hidden profit, right? It's a hidden profit. So which means that if you are in the business of buying all the time, if you buy, let's say, 5 of these properties, let's say in 1 year, it basically means you've got 5 times 3, which is 1.5 million that you got as equity, and that sits on your balance sheet. That is money. That is good money. Money for free that has come in. Money for you just buying the property. Okay. I hope that makes sense. And if it's not making sense, ask me the questions. Today I'm here. I just want us to kind of like dissect this as we're going along. So which means I want to come back to you now, which means that if you and I have invested in this property together, right, the value of your money has just gained the 300 without us doing anything on that property. We just bought it, right? Then the second thing that we want to talk about there is that, so we spoke about the income statement and we spoke about the balance sheet. These two documents are very important for the business. It is the lifeblood of the business to make sure that we are understanding how the business is running. The third component that I want to speak to is that this equity part, and I want to pack this equity here on my left-hand side here, because right now, by just buying, our equity grew, and that's a good thing. The more assets you have, the richer you are, right? The more you are buying, the richer you are becoming. This is why rich people continue buying assets, because the richer they are getting, the richer they get, right? Because they're buying more assets and they're buying correctly. The second component I want to speak to is that we have always heard people talking about location, location, location. What is it all about? Location, location, location means buying a property in the right place. What do I mean by that? We do student accommodation. If you are to buy a property which is exactly 1 kilometer away from the gate of the school, it means that your students can walk to home. Home, school, home, school, home. They can walk, right? It's a kilometer. If you are 500 meters, it's a little bit closer. If you are 100 meters, you are at the doorstep of the school. Now, having said that, if you are now going to kit this place up beautiful, right? And you all know we have done this before. We have made our places look very attractive, like it's not even like student accommodation. And this is what we do. And you are that close to a university. I'm giving an example here of a student accommodation because that's another business that we run. And you are in there, and basically what is now happening is that for a student who is maybe, I don't want to say lazy to walk, oops, but I just said it, but the closer they are to the school, the happier they are. So for that reason, when you are actually now doing these investments and you buy a property that is close to the school, and that's location, 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 you have the ability to charge what is called premium rates. Premium rates, okay? And let's assume it is that same property that we bought for 700. And the further you are from the school, the less you can charge in some instances, because obviously, now there's a transport cost for the students. If you are giving the transport now, there's an expense for you, which means that on your income statement, you now have a bigger expense going out. So you're losing money. You are losing money on your income, right? Now, I want to speak to the fact that when you are having the property now close to the school, location, 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 it basically means that you now can demand what they call premium rates, because people are demanding to want to stay at your place, because it's just close by. The parents is happy because it's next door to the school, right? There is no reason why their child mustn't not go to school because it's just there, right? So you can charge what is premium, and this is good for your income statement. The higher your income you are getting, the more the business is profitable. And unfortunately, this is where people only look at a property and say, hey, am I getting more money? Am I getting more money? Yes, you are. And in this case, it does not impact our balance sheet, but it impacts our income statement. So which means that we are getting more money. The more you have more money, right, income in your business, so you're getting more income, so you are liquid, right? And the more you then engage with the bank with a liquid business, you have 100,000 coming in every month in your business, and you've got 300,000 equity in your balance sheet, the bank are going to love you, right? They're going to give you more money. you are running a profitable business. Obviously, on your income statement, you need to tighten up the bolts to make sure that from an expense perspective, you're not spending more. And this is where it becomes more exciting, especially in the student accommodation, because the more students you have, the more you can buy in bulk, and we all know what happens in buying in bulk. You can now start buying directly to the service provider, to the manufacturer, and you cut out the middleman and you bank more money. You're saving, right? Does that make sense? I said, if you do have any comments, you can drop them in the comments, and I'm going to address them a little bit later before I close. However, let me jump on to the fact that, so we spoke about buying at a discount, you're growing your equity. And by the way, you can do this on your own, but this here discussion is for people that are wanting to invest in M5 chart alongside me. You can contribute a minimum of 100,000 and you call on the properties with me. So you're investing once and we are going to go to work and you will call on it with me. I'm just demonstrating here, where else can we extract money? Where else is the money? Robert Kiyosaki wrote a book called Why the Rich Get Richer, right? And for some of you, you might want to go and read this book. I'm going to do a review in a couple of weeks on this book here. And in this book here, he speaks about some of these hidden things. And exactly, I've taken that and I've started now practicing them in this business that we are doing. The other thing that we also want to talk about is that when you buy a property, right, we're talking about hidden gem, hidden money, hidden chalatas, hidden moolah that we find on a property, right? Because we just think that it's about making the 15%, making the returns. No, there's more. So we spoke about the equity, and we spoke about a potential higher income that you can get because you're buying in the right place. And the third thing that I want to speak to is that property appreciates in value over a period of time. Year on year, by doing nothing on your property, potentially at average, your properties will be gaining nothing less of 50,000, 100,000, depending on the area. So which means that if you are to look at it from that face value, you see that as you go into year number 2, number 5, number 7, and you are still in business, and this is why they say property is for the long term. The appreciation in terms of the market, of what is happening in the market, also pushes up the appreciation. And this is money over and above your 300,000. Your 300,000 is what you got in first. Now, this is appreciation because of what is happening in the neighborhood. So the appreciation now is making it 300 to 400, making it a 500, depending on the area. And this is why it is also important to be buying location, because some areas appreciate faster than others. However, in a particular area, you might find the fact that you also have a lot of investors coming in and playing in the area. And for that reason, it's called forced appreciation. I'm going to talk about maybe 2 areas. One area that I can speak about is down here in Johannesburg, or up here in Johannesburg. There's an area called Berea. A lot of people are like saying, I don't invest in Berea and things like that. It's a dead neighborhood, but statistically, appreciation has been wonderful, double digits over the last 2-3 years. Why? Because there's just so many investors coming in that area. Woodstock in Cape Town, right? A lot of activities. If you've been in that area, you pass through in that area, you would see, and you can testify with me here, that a lot of activities are happening in there. Blocks of flats are being built. There's just a lot of things happening in there. And basically what is happening here is that there is what is called forced appreciation. More investors are coming in, and because they are coming in, what is happening is that the appreciation is going up. So by you not actually having done anything at all, if you have a property there, by virtue of that it is amongst those that are being massaged to grow, yours is also growing. And that's why it is also important. And now I speak to the fourth thing, and that's another hidden amount, hidden income. Obviously, that speaks now to your balance sheet. And by the way, I want to stress the fact that the stronger your balance sheet, the happier any financer want to work with you. The stronger your balance sheet, the happier any financer is going to work with you. And this is why I am saying to people, come through, let's invest. When we come through and invest in M5 chart, we are going to have liquid, we are going to have an income generation, an income coming in, being generated, and we know how to buy correctly. So we are going to be working harder for you, which means that we're buying properties at a discount and we are hitting the equity all the time from buying. The last one is that when we buy a property, right, we are always buying it and there is a business that we are into. You all know that I'm in the rental business, so we are not buying and selling the properties. I'm of the view that, that's for other people. I'm going to leave it there. So we don't buy properties and we sell them. We don't do that. We buy properties, we hold on to them for the longest time, for as long they are making profit to us, we hold on to them. And what we then do is that on top of the asset that we bought, there is actually a business. What is that business? And that business, it is a rental business. So we've got tenants there, and that now starts working into our income statement. So because you're buying it at low and you can repurpose the place, you can do what we call improve the place. You improve the place. When you're improving the place, your equity value, the value of the property goes up. So which means that when you reassess it, it's your equity is also growing. So that speaks to the balance sheet now. However, coming back to the income statement, if you've got more tenants on your property and you're looking after those tenants, then from an income perspective, you can service the debt, number one, and you potentially have your own monies that's coming in that is called profit. However, if I introduce you to another concept where you actually now buying these properties cash and you do exactly what we've been talking about, ding, you've got your equity that you've built in, ding, you're buying in the rightful place, ding, then you've got property, a business that's running on it, whether it's student accommodation or whether it is normal tenanting. Out of that now, both your balance sheet and your income statements are solid. You can do what is called, whatever assets that you've got cash, you can go to the bank and say to the bank, can you give me a loan here on my properties? And literally all of that money that you had initially invested becomes available to you again. You can go on and buy more properties. And that is what M5 chart is all about. It is about investing in M5 chart. It's about buying properties cash. And it's about finding the right location, finding the right discounts that we can get, putting in forced appreciation that we can for the purposes of renovation and for the right purposes of getting the right income. Obviously, this takes time. All to do. Property is not for those that are wanting to receive big monies tomorrow. It's a generational thing. However, these can be achieved in the space of 6 months to a year, and you can be banking some money from day number one. I'm trusting that this has given you some good knowledge, and I wanted not to go above 20 to 30 minutes, but I'm in 25 minutes, and I'm just gonna go into the comments there and see what are some of the comments that are in there. But if you are interested to go into this journey with us, we are still open for investments. Come through, click on the link below, and next week, Tuesday, we will be meeting on a serious investor session, and thereafter you can put in your application and we can see whether we can work with you. Right, jumping onto the comments, right, let's see, a couple of people here. Cynthia from Cape Town, hey, how's it going? Rudy from Cape Town, good morning, sir. Onati, glad for the session, awesome stuff. Lesages watching from Pretoria, Onati from Cape Town. Desiree from Johannesburg, good seeing you. Bongs, I get it now. It's called revaluation in accounting, and that equity is a revaluation reserve. Thank you, TJ. Yep, that's it, Bongs. Lesanya, it says, yes, it is. You can even do this after renovations. Yes, that's correct. So these guys are having a side conversations. I like it when we start talking about these things and we all start getting it, right? That's awesome stuff. Palesa says, for first-time buyer who want to start investing in property, how does one go about it? Palesa, go through to my website, M5 Property Varsity, and you can literally, when we're done, we are going to give you that link. Investing, okay, great. And who else is in here? Port Elizabeth, Zanele, how's it going? And we've got Mapefo, she's in Pretoria. Awesome stuff. It's been great having you around, guys. I am going to be on my bicycle. I am going to one of the sites today where I am just wanting to do a check-in with the team. They're doing some renovations, and I'm told from Hubert and Dan that they are fairly done. So I just want to go and see. I haven't seen the property in a while, so I'm just going through to spend the afternoon there. Maybe I can take a video and we can check out that video a little bit later. Maybe today or maybe tomorrow, who knows? Yeah, but that's it from me.